Good morning to everybody, and we are live. Thank you very much for joining us today on Behind the Markets. It is the 3rd of October. It is the running week now, where we are actually getting towards the final part of the year. So to everybody, we are thankful for you being here with us. Stephanie, good morning, and how are you doing on this wonderful and gracious morning?
Morning, Munyumba. I'm fine. How have you been?
Fine, thank you. And let's get into today's breakdown. First thing we're going to actually do is get into, so we're going to go through two things today before we get into our conversation. We're going to be continuing actually a little bit from yesterday, Stephanie. I think that was one of the main points I wanted to touch into. We're going to be continuing a little bit from yesterday's conversation, which was talking about the power of why, drilling down deeper, but also having a good root cause, a root reason for doing what you're doing. But firstly, Stephanie, we're going to get into the market roundup, and also we're going to talk a little bit about the fuel price adjustment that happened. I know we don't report it, we analyze it. That's the big difference. We're going to break down the analysis of that. But first, let's get into the market roundup on Finance Tuesday. We did see that the Kwacha has still continuously pushed into the 21.1081. Kwacha is getting weaker and weaker, continuously down 0.3% on the week, dollar is up 0.3% on the week, up 3.37% on the month, and 16.4% year to date. Still in a buying pattern. Stock market was up yesterday, while Zanaco and CEC stocks also moved up again. Stock market is at a new all-time high, up 0.3% on the day yesterday, and up 27.34% year to date. Bond market was up 0.1%, while in dollars was up 0.05%. And the composite bond interest rate also pushed up yesterday. That was an unfortunate signal as we're getting out of the auction. We'll be going through auction data tomorrow. We did see the rand get a little bit weaker, down 1.47% yesterday, up down 0.46%, trading at about 1.1016 as of yesterday. We did see that the rand is up 3.14% year to date, up 2.36% on the week. So you do see that there is volatility in the rand, while the dollar is continuing to pile up strongwards and upwards. We did see that the bond index up 0.01% yesterday on the date, but up 21.32%. This is secondary traded bonds. So this is the index for secondary traded bonds and the whole network of them, up 21.32% as of yesterday. And the GRZ bond index in dollars up 0.05% yesterday, but up only 4.8% year to date. We did see yesterday that copper fell even worse yesterday, as economic data coming out of the US and China is still concerning to so many. Copper is down to 8,066. This is the lowest that it's been for multiple months. Copper is getting closer to trading below 8,000, and that's going to be very weak for the outlook of the commodity. Oil, thank goodness, dropped yesterday by 5%, down to 90.45, as we're waiting for reports coming in, as eyes are going to be on OPEC. The OPEC report did come out last month, but we're going to be going through some of that today, with gold also down 1.07%. So all cross commodities showing that growth expectations of the world are starting to slow down as PMIs are coming in on a weaker basis. Bitcoin was up 3.8% yesterday in Kwacha, because of mainly the movement upwards in dollars, while Ethereum was up 0.01%. Gold was down 0.7475%. So when you look at the cross asset mix as of yesterday, you do see that bonds up 21.3%, stocks up 27.3%, and the red bars, by the way, are adjusted for inflation. So when we flush out inflation, bonds up 11.2%, stocks up 17.2% ex of inflation in real returns. Dollars up 16.6% and real up 6.5%. Gold up 17.8% and real terms up 7.6%. Bitcoin is up 95.5%. In real terms up 85.3%, and Ethereum up 61.8%, and in real terms 51.6%. Let's take a look at how this is also looking in terms of the Q3 analysis. So this is how assets also played out in the third quarter. We'll start analyzing how things are going forward. In the third quarter, we did see that bonds were up 7.6%, while stocks Bonds traded upwards 7.6%, while 7% versus 7.6%. Stocks were up 13% versus 5%, so you can see some momentum acceleration in the stock market. And also USD was up 19.6%, just to erase the losses of 17.5% in the last quarter. Gold was up 15.6%, so still a net loss versus 19.2% in the second quarter. While you're looking at Bitcoin, which was up 5.2%, but that's still lower than the losses experienced in the second quarter of 11.4%. And Ethereum, same story, 3.9% versus a loss. So the net gainers, where you can see compounding growth, is where you want to see quarter after quarter there's growth. It's in bonds and in stocks. Those are the two who are showing consistent and compounding growth. Bitcoin and Ethereum are up very strong, but that's just due to quarter one returns. Quarter two and quarter three, as you can see, have been very weak for the two, while dollars have only outstretched the losses that were experienced at the end of quarter two. Now, let's get into a quick review of oil prices. There was a price adjustment last week, Stephanie, on the weekend. We did see that the ERB moved up. The ERB pushed up the price of pushed up the price of fuel to 29.98 kwacha and diesel up to 29.96 kwacha. So they're almost at parity. And it appears that diesel really got the brunt of it. So here's some of the analysis that we can show in terms of the graphs and the charts. As you can see, there was a movement upwards. The movement upwards in diesel was much steeper than the movement upwards in fuel. So the movement upwards in diesel was much steeper than the movement upwards in petrol. You can see it was almost like a flat or sideways movement in the price of petrol. What we also did see last week was Sorry about that. We did have a little bit of an echo there, and I understand that now. Right. So what we also did see last week was the kwacha price of a barrel of crude. As you can see, that moved up from 1,652 kwacha to 2,005. That's one of the highest that we've seen. So the biggest problem has come to the cost of a barrel of crude. That has been one of the biggest drivers. So if you're looking at percentage growth also, in terms of percentage changes month on month, you can see that petrol only went up by 1.9%, while diesel went up by 11.5% from the last adjustment. But you can see a 21.4% jump in the price of a barrel of crude. So you can see that was really where this pressure was coming from. In the kwacha price of a barrel of crude, that was up by 21%, and that put a lot of pressure on the price of petrol and diesel. So there's the global influence, and I'll show you the breakdown that we use. If we're looking at year-on-year changes, petrol is up 39.2% from where it was last year. Diesel is up 29.9%. A price of a barrel of crude coming into this country, if it were to, from the crude markets, is 42.1% up, mainly due to a combination of the exchange rate and also the price of crude. So what is driving the cost of your pump price? Take a look at this September, the last one on the right. The number one driver is actually the Brent crude price. It's up 45. It has contributed to 45% increase in the price, while 23% of the price change was coming from the FX rate, while 32% pulling downwards was coming from supply chains, meaning the supply chain was actually showing itself to be more efficient. It was the global factors that were the strongest, and then slightly after that was the FX factor. So that's what kept petrol's price only moving up ever so slightly. If you take a look at diesel, it's even worse. The global price of diesel, the finished price of diesel, was the main contributor to the price moving upwards. The FX rate did actually pull a little bit in that direction, but you can see the supply chains were also trying to reverse. Remember, last month, it was the supply chains, it was the cost of processing and transporting petrol and diesel that caused the majority of the price hike. This time, the cost of processing and transporting were actually trying to pull the prices down. So there were supply chain interventions, meaning that, and I'll say this, Stephanie, it actually could have been worse had the supply chains not have been as efficient as they should have been. So that's what the reflection of the price is showing. The price at which these things were brought in and the price at which it's now reflecting. It appears that the cost of bringing them in has been actually what has brought the price, has kept the price from going up much higher than it should have. I think anyone knows that I was talking about the fact that we should have been seeing a 33 kwacha pump price for oil. We should have been seeing a 30 kwacha pump price for diesel or more. So really, I think the reflection to those two, or to petrol not going up to 33, was the supply chain factors that probably did help play a little bit more of an efficient role. Now, where we're looking going forward, the most important thing is to now assess this also going forward when it comes to fuel. This is the outlook that we've got from the Energy Information Administration from America. If you're looking at the black line, that's the future oil forecast. So we're expecting that Brent prices are still going to be in the 92 area. So expect Brent prices to stay as high as they've been. So fuel prices are not coming down anytime soon. Actually not coming down. Let's start getting used to these ones, at least for the next couple of years. But fuel price not coming down anytime soon. $92.7 is what's forecasted for the Brent price this year. This is higher than the 87.7 previous forecast. So you can see the forecasts are even getting higher because there's a lot of pressure in the supply side. Three factors, Stephanie, that the three main players who are driving up fuel demand. Number one, China. China is expected to increase its fuel demand in the fourth quarter by 0.6 million barrels. India is expected to increase also by 0.4 million barrels. And at the same time, India is expected by 0.3 barrels, China by 0.5. Africa is also expected to increase its oil demand by 0.4. So all the increased oil demand is coming from China, India, and Africa. So we are applying a lot of pressure to the oil market in terms of demand, while at the same time, U.S. supply is slowing down right now. U.S. supply is expected to obviously pick up next year, but this year, U.S. supply is starting to slow down. According to the OPEC reports, it might actually be picking up, while at the same time, you're seeing Mexico and Russia pulling back a lot of supply, and Saudi Arabia. So this is what we're seeing in terms of the fact that oil prices are even higher, that are going to be higher than expected even going forward, but there's going to be a huge spike. So a lot of the pressure on the pump is going to be in the fourth quarter. So expect a bit more inflationary pressure sitting on our markets. What we're also seeing now is that oil supply, oil supply is actually picking up in terms of oil versus oil demand. So we're getting into a slight deficit, but the surpluses are getting smaller and smaller. Sorry, forgive the actual mix-up of the actual curves there. I don't know what's happened in our TV, but it's actually meant to be oil demand that's in green and oil supply that's in red. Oil demand that's in red, oil demand supply that's in green. Those things got switched up. But what we are seeing is that we're going to be seeing quite strong oil demand going into the future. We're going to have a surplus demand in the second half and throughout most of next year. So expect prices to still be relatively high. And I think this is what everybody should be looking at very carefully. So this is where we're seeing most of the markets. What we're also seeing, Stephanie, is the demand for OPEC oil. Demand for OPEC oil has started to rise to 29 and it's going to rise to 30. This is important because OPEC is pushing its prices up. So OPEC keeping prices up is also a lot of stress on the market. So 30.7 is also showing that OPEC is putting a lot of stress on the market by putting expensive oil on the market. And the OPEC and OPEC plus nations all want to benefit from oil over the next 5 years. So they're planning on keeping prices up. So with OPEC always having 30 million barrels a day, that we should be expecting to supply onto the market over the next, at least until December 2024, expect oil prices to also maintain an upwards position as well. So that's part of why there is a problem in the market. So I think pay strong attention to what is happening there. So that has been our roundup in terms of the fuel. One of the summaries I can tell you now is that fuel prices is going to be a lot of pressure going forward. It's not going to be easy. It's going to be a lot of pressure on the market going forward. So a lot of people should brace themselves for higher transportation costs and also the reflection of transportation costs in food prices and things like that. This is why it's also, Stephanie, it's quite important for manufacturers to start fanning out in this country. I think in the budget, they are trying to push a lot more people to go and set up their businesses in rural areas. And I was talking with a colleague this morning. Part of that is asking people, let's say, who make peanut butter to stop producing in Lusaka and to go to where the groundnuts are actually grown and start producing there and then distribute throughout the country. And I think this is where most of our industrial production is happening in one area as opposed to happening close to the source. One of the things you find that has helped countries like America become who they are is that they produce a lot next to source. They produce where source material is. So if you can get into the habit, people, of producing as much, basically, let's say, yes, the bulk of our milli meal should be produced in the Eastern Province, or wherever things are, we should be producing as much of the things there and start doing value addition from where the source material is, will actually fan out a lot of jobs and will actually fan out a lot of economic activity. The problem right now is all of our industrial activities happening in one area, and for reason. We haven't built any manufacturing infrastructure. There's no water, there's no electricity, there's no roads to get out for things. So it's difficult for a manufacturer to justify going into the rural areas to go and set up when there's barely any activity there for them to be able to value add and transport to their market, which is sitting in Lusaka and the Copperbelt. Because remember that 58%, Stephanie, of the working population in this country are found between Lusaka and the Copperbelt. And who, Stephanie, buys things like peanut butter, soap, dishwashing liquid? It is the working population. So remember that workers are also customers. So that's one of the problems that we're facing in this country, how to actually, who moves first, the workers or the customers? One of the things I've actually talked about, and I will be talking about the budget, especially on Friday. That's going to be a deep breakdown. That one of the main things that we do see, because we're running numbers, people. We're not just coming here to come and read the budget to you. It was read already. We're coming to analyze it so that you know what to do with that budget. And we're going through each of the things technically. So one of the things I've always pressed the needle on, Stephanie, is where do people retire? You know, I've had this conversation with people about where they build their final retirement. And in Zambia, everybody retires where they've been working. That's, I think, has been the tough part. We all, except for the whole return, and nobody, especially people who've worked white-collar jobs, Stephanie, nobody wants to, quote-unquote, return to the land. Okay, that's not a comfortable thing where somebody wants to go and return to the land and start farming for their lives in their retirement. But what I'm talking about is creating a small town retirement environment. A lot of people, you find these cultures in the UK and in the US, and quite frankly, in a lot of Europe, that somebody maybe worked in the central city for a long time, and then when they retired, they went to the countryside where it was quiet, it was peaceful. They would come to the main city once in a while, but they retired in the peace and quiet of the countryside. So in other words, they found a smaller area, built a home there and retired. And then they took their retirement income, whether it's rental income, whether it's rental income, whether it's even retirement funds. So let's say you've got a bond portfolio. Let's say you've got an annuity from your workplace. Now, because of the good banking infrastructure that we have and the financial infrastructure we have, Stephanie, you can now actually have access to, let's say you've retired and you've got bond coupons that are expected to come in. You can live wherever you want in this country and still receive those and utilize them because there is mobile money around. The banking has become a lot more decentralized. Why do people live in Lusaka? Well, if I'm going to have money coming through bank accounts and everything, I can't live in the rurals where there's no banking systems. How am I going to access my money? So there was a lot of inconveniences, but we can start to revision that. Stephanie, I'm personally, and I've said this multiple times, Zambia is in my eyes. That's why I'm thinking about one day just saying it's time to settle down and look at the river until I pass. You need to start looking at things like that. Why I say that is that if you can decentralize your retirement community, that income, retirees now earning their income in various little cities will actually lead to a lot more economic activity because they'll be spending their money in those areas, spending their money in those markets. They'll be using a lot of their money in those communities, which will spur a lot more economic activity. I've also talked about decentralization of higher education institutions and to create more boarding facilities for higher education institutions outside and see if you can create a few college towns as well. Those are things that we should be doing in terms of broadening our people outside of the main city to try and decentralize economic activity. That could be part of what we should be looking at. But then again, Stephanie, I say this, if you're in your 60s, one of the biggest things that you're thinking about is proximity to a hospital. When you're 60 and 70, the biggest problem you're not thinking about is how comfortable it is to retire. It's that when something happens to you, how quickly can you get to a hospital? How quickly can you see a doctor? So people are retiring based on their proximity to hospitals. So it's very difficult to talk about also decentralized retirement when we have got concentration in healthcare. If we don't have enough hospitals out there, it makes it very difficult for somebody to consider retiring in a small town because healthcare is your number one retirement problem that you're battling. I'm going to leave that there, Stephanie, before we get into our main conversation. And I know we've started this, but yesterday, Stephanie, we were talking about finding your root cause. What is your root reason for something? So I'm going to start, Stephanie, by showing a little video that I shared yesterday. So you'll find it on my page and also in the groups I administer. But I shared it yesterday. It's a clip from a show called The Animaniacs. It was a cartoon that I used to watch when I was younger. Yes, people. There was a time when I was actually younger. I used to watch a cartoon called The Animaniacs. And they had this little character, there are these two characters named Buttons and Mindy. Mindy was a little 4-year-old girl who was so curious and walked around, and she had this dog named Buttons who used to constantly have to protect her from getting hurt or walking across the roads and getting bashed. But Mindy was a very curious child, and she would always ask the question, why? But whatever answer you gave her, Stephanie, she would then ask again, why that? And she would continue asking why until you got to a dead end and finally had to give her the real reason. And why I'm saying this is we need to talk about root reasons for your financial planning, okay? Root reasons for doing what you do financially, because people don't dig into the roots. But check this little clip out. And I know most people would say, whew, such a child could frustrate me. But let's be honest, this is all children. This is a clip from Buttons and Mindy, or it's just a compilation of Mindy torturing people with the word why.
What you doing?
Eating lunch.
Hi.
Hi.
What you doing?
Eating lunch?
Why?
'Cause it's lunchtime.
Why?
'Cause we worked real hard all morning.
Why?
You got me, kid.
Okay, I love you, Papa.
Come, Mindy, it's time for us to conquer the world.
Why?
By right of superior intelligence, I am best suited to guide the destiny of this planet.
Why?
My empirical powers give me the mandate.
Why?
Because it's something I want to do.
Okay, I love you. What you doing, Mr. Man?
What's it look like? We're robbing the bank.
Why?
'Cause we're bank robbers.
Why?
'Cause that's what bad guys do.
Why?
'Cause maybe our mothers didn't hug us when we was kids.
Hi, Mr. Man. What you doing?
Cleaning an oil filter,
Why?
'cause it's dirty.
Why?
It's got oil all over it.
Why?
It's a car thing, kid. Now look out, I gotta get to work.
Okay, I love you, Papa. Hi, Mr. Man. What you doing?
Getting ready to let all the passengers off.
Why?
'Cause we're coming into the station.
Why?
So the engine can turn around
Why?
for the return trip. Now skedaddle.
Okay, I love you, Papa.
Who rang that bell?
Hi, Mr. Doorman. What you doing?
I'm guarding the door and you can't come in. Not no way, not no how.
Why?
'Cause I'm the boss of these things.
Why?
'Cause that's my job.
Why?
'Cause, oh, all right. Come on in.
Okay, I love you. Bye-bye.
Yeah, that's pretty. If you have a 4-year-old niece or nephew, or you have a child, you know that's them around 4. Where are you going? I'm going to the shops. Why? I'm going to why? But you know the funny thing is that that's actually a technique, Stephanie, for getting into your root reason. So I ask people questions like when they say, "Well, I have to hold on to this asset. I have to hold on to this asset because," and I'll say why. Then they'll give me a reason, and then you just have to ask why. Then they'll give you another reason, and you have to ask why. What you'll do is you're digging deeper and deeper and deeper and deeper until they find out that, I actually don't have a good reason for holding on to this. Actually, they should consider selling it. So the problem, I think, whenever we're looking for root reasons as to why we own things and why we do things, is that we don't interrogate why. And what I mean by that is remember yesterday we talked about something called the 5 whys. And the 5 whys teach us a lesson on how to actually deal with the questions of life, how to actually deal with answers that we should be looking into. That's a very important thing that we picked up from yesterday. We're talking about it from our mindset factors. And the reason I wanted to bring up the 5 whys from yesterday's conversation, that's why I said it is a continuation from yesterday where we talked about looking back, is that you must ask a person, okay, they'll say, I want X. Munyumba, I want to learn how to invest in bonds. Okay, why? Because I want to build wealth. Okay, why? because I don't want to have any struggles anymore with money. Okay, why? You have to keep going down into the questions of why. So there is a stand until you get to now. There's levels, Stephanie, to each why, and I only think we've progressed. There's 5 levels to whys that we ask for people. The first level, Stephanie, is actionable. So they're going to tell me an action point. Then I'm going to ask why. Then a person will likely give you a functionality. So they'll tell you the logic as to why they're doing what they're doing. Then you ask them why. Then they're going to tell you why because everybody else does it, Stephanie. It's social compliance. Okay, well, my parents did it, or it's the thing that wealthy people do. So that's why. Okay, then why? Then after they've given you a social compliance reason, they're also now likely, Stephanie, to then give you a reason that is more emotional. Okay, once somebody tells you something that's socially compliant, they'll then tell you something that's emotional. Well, it makes me feel. I look for that keyword. Okay, then why does it make you feel that way? Then they start going into something that's aspirational. Well, really, it's because I want to achieve this. Well, why do you want to achieve this? Because I want to become this. So the real reason, Stephanie, to why a person buys the things they do, why they own the things they do, why they want to do the things they do, comes down to who they want to become. Okay? That's what they want to become. There's something that they want to become, or there's something they believe in. So it's the final point you have to drill down to, if you ask yourself, why do you spend so much money on certain things? Keep asking why until you now have a reason that explains something you believe in and something you want to become. And usually something you want to become is built on something you believe in. And I know that sounds like a lot of gobbledygook, but let's try and give you the case example I was talking about yesterday of building your financial habits. So remember, Stephanie, we've always given this picture. Sorry about that. I think that came back by mistake. Okay, so to give you this financial picture here of what happens to people who are millionaires. Remember that 94% of them live within their means. Why? Then you can start going into why do they do this? Well, logically, you have to do that to save money. Why? Eventually, you're going to get to there's a personality, there's a belief, and there's an ideology behind what they're doing. Okay, that's really your real reason for something. So 80% of them invest long-term, 70% of them do consistent things. Invest consistently in unit trust. They invest for 28 years. They start with zero. They start with zero money. They're below middle class. They're not chief executives. They're They're not top 10% earners, and they went to public colleges. They're revenue aggressive, self-starters, aggressive investors, have financial advisors and diversified portfolios. They're family driven. They're first generation millionaires. They work harder than anybody else. So the question is, why are they like this? So let's get down to, because for you to do this, they know that they have to have freedom from worrying about their loved ones. Okay, so one of the reasons they do it is down to this wealth pyramid. The activity, Stephanie, or the character you will exude is the base of this pyramid, which is your actions, your belief, and your character. That's what you will exude. Why will you be like that? Well, I will be like that so that I can manage assets better. I can pay my taxes well. I can build an estate. I can manage my cash and budget properly. I can make sure I take care of risk by buying life insurance, property insurance, insuring my home, and having a good mix of insurance. And I can make sure that I manage debt. I don't want to get into debt, and I want to stay out of debt. So you act the way you do. Why? So that you can manage your money properly. Well, why do you want to manage your property? Why? So that you can achieve your goals. You want to manage your assets, taxes, estates, cash, risk, and debt so that you can build a harvest. Your harvest being your retirement saving. You can make sure you financed your healthcare so that when you are now in retirement, you're not worried about being able to finance health because healthcare becomes more expensive. You can pay for your children's higher education because, Stephanie, if you don't, a child is only 33% a child is 3 times more likely to graduate from college if their parents actually save for and pre-finance their college education. You can actually build your home so that you're not under stress when it comes to rent when you're in retirement. You own the home you live in, And therefore, housing is more of a discretionary expense. And any huge purchases that you're seeing in the future, you don't go into debt for them. You choose, Stephanie, to save and invest for them. So you manage your money so that you can achieve your goals. Well, Stephanie, why do you achieve your goals? You see, we're still doing the same thing. Why? So that you can achieve you can achieve a state of financial freedom. Okay, so you want to achieve a state of financial freedom, which is avoiding worrying about your basic needs. You don't want, Stephanie, when you're in retirement, now you're thinking about where's Millie Mill going to come from? Where's electricity going to come from? The problem I've seen, Stephanie, is a lot of people go into their retirement with a lot of land and all these things that don't generate cash. They've got a lot of things. They're asset rich and cash poor. Things that don't make money and are hard to liquidate into money really give you a problem because, Stephanie, here's the reality. You have to eat every day. You have to move around every day. You have to buy clothes regularly. You need to put utilities in your house. You need to fix up your house and you need to pay your rent. Those are recurring expenses because once you are alive, you are incurring liabilities. So in order to offset your living liabilities, you need an active cash flow that is predictable. This is why bonds, property are often the assets that people bulk a lot of their money into. But if you retire with a pile of cash or huge amounts of assets that don't make any money, you will constantly have to sell things and suffer because you're not meeting your basic needs. So to have freedom from worrying about your basic needs, you need a harvest that will balance your cash flow. And you need health that also protects your health. In order to stop worrying about your loved ones, you need a harvest to be able to take care of them if you still do. And you also need higher education to have educated them and make them independent. In order to stop worrying about chaos and disorder, Stephanie, you need to make sure that you've got a harvest which is in a safe and diversified way. You need a home. You need a home to protect you from anything, and also you need huge purchase money to also be able to factor that in. Then you need the freedom to work. You need the freedom from having to work to avoid these three worries. That is why you've done that. So, Stephanie, why have you achieved a peace of mind? You said, okay, I'm managing my money. Why? To achieve my goals. Why? To reach a state of peace of mind. Why? To pursue life fulfillment. This is your ideological part. Here's your root reason. Okay? So you want to build a legendary existence, you want to build a legacy, and you want to leave a lineage. You want to live a strong legendary existence. And so when you are looking at managing your cash, getting back here, managing your cash, building assets, why we went through all these whys is so that you can connect budgeting to your legendary existence, risk management to your legacy and your lineage, debt to your legend. You want to make sure that the things you are doing now are connected to the things you believe in the future. And that's when a person has energy, Stephanie, true energy to go through market downturns, issues in the market, problems. A person can now get through that. Why don't people why don't people go through their financial goals strong enough? Well, the reality, Stephanie, is they don't have a deep enough reason. They don't have a deep enough reason to really push through the issues. Now, I know, Stephanie, everybody has a little 4-year-old, but that 4-year-old can now teach you a lesson as to the way you must question yourself about the things you want to do. Even when people squander money into those scams, like remember those farming schemes where people thought they could be online farmers? where people thought they could be online farmers and then they lost a lot of money. Well, the point I'm going to say is that you need to do that. You need to start questioning why you are doing certain things so that you can get down to the identity or the ideology. There's often, Stephanie, an identity or ideology that is driving a decision, but we don't like getting in there because it speaks to who we are. And sometimes, Stephanie, we don't really like who we are. So there's a psychology behind money. That's why, what's his name? Morgan Housel, I'll leave it here, said, you don't really want a fancy car, a big house, and a sparkling watch. You want the respect that you see people who have those things have. You often see people with big cars are respected, and you feel like you need respect. That's an emotional deficit. Why do you feel like you need these people's respect? Keep digging down through your functions, through your logic, through your social programming, through your emotions, and your aspirations down to your identity and your ideology, and you'll see whether your decision is flawed or whether you need to always remember that's the driving engine. And I will leave that right there.
Thank you very much, Munyumba. Looking forward to tomorrow's conversation. It's been beautiful. And to those listening and on Facebook, continue to ask yourself the whys and obviously dig down to the real reason.
Yes, exactly. Or just imagine a little 4-year-old girl or 4-year-old boy in front of you every time you say something to yourself, asking why, and and you train yourself to answer. Have a wonderful
Yes,
day.
definitely. Right, so Munyumba, have a good day.